Kate Rooney. Kate, thank you. Jason, how do you see the crypto crash affecting the broader stock market? Is one leading the other? And do you think we're going to see more carnage there?
Look, I think there's some flavor of one leading the other. We've been through this before. We saw this in 99, 2000 to 2001. This has some flavors of that, where you had the crypto boom, you had the technology growth boom, you had the excess valuations in that space. It's one of the spots that you could find the excesses in the economy. And now as it unwinds, like you see lower valuations for Coinbase, for crypto assets, for technology assets. As those lower valuations come in, M&A slows down. Technology-related spending slows down, their capital spending slows down, their hiring slows down. We're seeing announcements like Coinbase cutting workforce. We've seen slowdown in hirings by companies like Tesla. That's probably something that'll ripple through the economy, whether it's the same size and scale as before. I don't think this is a perfect mirror image of that. It's similar, but still has its own, only its own flavors are a little bit different. I'd probably say it seems like it's a combination of that 0001 cycle, something that's similar to like the 60s when inflation first started, and something that also has some flavors of that 93, 94, where the Fed's ramping up really quickly, going up to a point where they may be too far in tightening.
Well, 75 basis point, if they go for it tomorrow, will be the biggest hike since 1994. Let's
it almost feels Greenspan-like.
Well, yeah, a lot of people say Volcker, but Greenspan in 94. Technology is working today for a change, and Oracle is one of the biggest winners in the sector after beating Wall Street's earnings estimates thanks to strong demand in its cloud business. Frank Holland joins us. Frank, Oracle's stock rallying after much stronger than expected cloud numbers. What could it mean for some of the other cloud names which have been under some serious pressure this year?
Yeah, absolutely serious pressure, Sarah. Investors have taken the 36% growth of Oracle's infrastructure cloud business as a sign that much better days could be ahead, despite the growing interest rate pressure. You mentioned the rising dollar, 10% over the last year. Oracle's cloud infrastructure biz competes with those hyperscalers. We're talking Amazon, Microsoft, and Google. Those three, the big three, they have roughly 3/4 of the market. Oracle more known for its legacy business, where workloads are on-site or on-premise. Analysts say a boost to their business is a sign of expansion and continued transition to the cloud, not a sign of delay or contraction when it comes to that trend. And of course, if you're moving to the cloud, one thing that you definitely need these days especially is cybersecurity. We're watching those stocks today, many of those stocks, including a SentinelOne and a CrowdStrike, up both more than 2% right now. And as we mentioned, the dollar, the strengthening dollar, up 10% this year. Oracle also citing a currency impact of 3 to 4%. The fact that they were able to grow their business when they have so much of that business overseas, a very positive sign about those trends, not only here in the United States, but globally.